Welcome back, Money Vikings, Money Viking G. All right, thanks for joining me. Nice little, let's do another walking video. I've wanted to share some of the things that I've been researching recently about the housing market and about real estate in general. And I'm going to bounce it off of some statistics. I'm going to bounce it off of Bitcoin and the effects of that, and just sort of overall what we're looking at in terms of real estate. And I'll probably primarily be focusing on single family homes. That's kind of the sort of bread and butter of real estate, kind of the standard thing you can look at. There's obviously such thing as very unique properties, very unique commercial properties. There's apartment complexes, there's all kinds of different types of properties, farmland, etc. But when people are talking about the real estate market, they're typically talking about the single family home, market. So generally speaking, pretty sure that things are going to be coming down. I don't know if we'll see a huge drop, but I think we'll see a steady decline in values, or at least a sort of bumpy sideways move for a while. And there's a couple of reasons for that. First of all, there's a big demographic reason for that. So as we know, prices of everything are all about supply and demand. When supply is low and demand is high, the price of something goes up quite a bit. And when the opposite is true, when supply is plentiful and demand is low, then basically the prices of things go down. So same with housing. Housing is just a consumable, product, really, in a lot of ways. So what's happening right now is you've got sadly, we have about 5,000 to 6,000 people of the baby boom generation that are passing away. Probably the estimates are every day. So you're going to have a situation where they owned most of the housing. I've seen graphics on this. You have millennials maybe own 15 to 20% of the housing. Gen X probably owns another 30%, but the remainder of that is owned by baby boomers, a very large generation. And there's a very, very cool bird here that is distracting me, and I'm gonna see if I can get an image of, but you can hear him, you can't see him. But anyway, that's kind of cool. Somewhere in there. All right. So you have basically that generation is starting to pass on, and like I said, at the tune of 5,000 to 6,000 people per day. Well, what's happening to their homes? Their homes are either going onto the open market, or B, the homes are being inherited or passed on to a child or another relative. So that's basically going to push a lot of supply onto the market over the next, really, that will probably continue. That'll probably continue for at least the next decade. I mean, I'm not an expert in demographics, but I'm pretty sure that's going to continue on for quite some time as that generation moves on, and then their assets are passed on to the younger generation. But in a lot of cases, in some cases, those houses will not be inherited. They'll just be they'll be put onto the market. So that's going to add a lot of supply. You have another thing going on. I think you probably have somewhat of a demand situation too that's unique. So I'm going to go up the hill here. So if I'm out of breath, that just means I have to keep going. So you have a demand situation. Younger generations, I don't know if they are totally sold on the whole home ownership thing. So, I do believe it's still part of the American dream for someone to own a home of their own. I do think that a lot of people like that, but you'll see, I follow Ramit Sethi a lot, and I read his books, and he's a financial guru type, and he talks a lot about how you really don't need to own a home in order to achieve wealth and all that kind of stuff. So anyway, just keep that in mind. So there's that. Okay. The other thing is sort of a kind of existential like asset thing. So Bitcoin and crypto is also now taking a lot of capital. A vortex of capital is going into Bitcoin. That may also drive down the value of homes in a way, because as the price of Bitcoin rises comparatively to homes, the value of a home goes down. So there's going to be a lot of different pressures going on. Do I think, do I think homeownership is dead? No. I do not think prices are going to collapse. I don't think that's the situation we're talking about. But I do think you're going to see some downward pressure. So I think that's kind of the bottom line in terms of housing. So might be, Berkshire Hathaway just picked up D.R. Horton, the home builder. So, Berkshire always comes in and picks up shares of companies that are having trouble because they see a bright future. They can see, again, they look 5, 10, 15, 20 years down the road. So will things change? Will they adapt? Yeah, they will, of course. And it always does with the real estate market. So anyway, those are just some thoughts on housing. I think that if interest rates come down a little more, that might change the dynamic. That might make it more appealing for people to buy homes, especially younger generations. As Gen Z enters the housing market here in the next, couple of years, they're probably gonna want to. They may. I don't know. I mean, generations have different sort of priorities and different sort of like cultural sort of vibes. So we're gonna have to see how that plays out. But yeah. All right. Thanks for watching. See ya.